Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. And the general trade setup as of now looks good. The SGX Nifty is indicating a gap up of close to almost 100 points. But remember, we were down almost 60 points yesterday. So nevertheless, expect a 30 to 40 point gap up opening when we start with trade today morning. How did the ADRs pan out in trade? Not the best of the days for the ADRs because Infosys was down 1%. ICICI, Tata Motors and HDFC Bank were flat in trade. Wipro was the only one that did pretty much decent for itself. It was up almost 0.7%. But apart from it, muted trade all across for the ADRs. Crude has been rather muted for the past 3 days. It's been extremely range bound, but nevertheless, crude WTI is trading below the $60 barrel per mark, and Brent is trading below the $63 barrel per mark. Very strong close by the base metals on the LME yesterday. Anywhere between 2 to 2.5% is the gain that we've seen from copper right up to tin. Aluminium was the only one which ended with a positive bias, but the gains were not as much as the other base metals. Even if you're looking at what's happening with China, copper and zinc, both of them are trading up almost close to 1 to 1.5%. You have steel, which is trading up almost 0.5%. Aluminium is trading flat in trade, and there seems to be more traction that's coming in for the precious metals. The gains have extended for gold, silver, platinum, as well as palladium. Now, yesterday, what we're seeing for the past few days is that FIs have been heavy sellers. They sold in 814 crores, but DI has bought in 1342 crores from the cash market. So on a month-to-date basis, close to 5,000 crores have been sold by the FIs, and DIs have bought in almost 6,760 crores in the cash market. Now, the Nifty did well for itself. It was up almost 84 points. But what did extremely well was, the mid caps and small caps, which were up almost 1.4 to 1.8% respectively. So the traction was clearly there. The VIX fell in significantly. It was down 7%. The real estate and the oil sectors did extremely well. They were up almost 1.4 to 1.7%. Now, the Nifty was up almost 84 points. What contributed positively? It was Reliance, HDFC Bank and HDFC, which contributed. L&T was up almost 6 points. What didn't contribute was SBI, HCL Tech, ITC and Infosys. So they were in the red. But Agam will join us now for the FNOQs. Agam's just running a little late, but I think the Qs were decent. Agam, what are we seeing as far as the FNOQs are concerned?
Right, so Darshan, when it comes to the Nifty, as you can see, we've seen about an 84 point again, coming down, and we've seen longs building up as well when it comes to the Nifty futures. In fact, about 5.5% added there. Moving in terms of the Nifty Bank futures, what we've seen is very little change in the open interest, but the index, of course, has moved up by as much as 0.9%. That said, in terms of the India Volatility Index, we have seen it come off by as much as 7%, currently standing at around 18. However, this number is likely to change considering we are looking at so much volatility. But the put-call ratio, of course, currently standing at around 1.1, not much has changed there. And what's really a little bit of a surprise is the kind of way we've seen the options change in terms of open interest last Monday. So what we've seen is writing in the 10,600 call and writing along with that at the 10,500 puts as well, which is not very usual. That said, we have seen Dish TV and JP Associates move into the band, so we are expecting a restricted trade there. On the other hand, Gen Irrigation moves out of the FNO band. We've seen a lot of longs also build up in the likes of Bank of Baroda, where stocks moved up by as much as 8%. And along with Bank of Baroda, we've seen Nestle India, where also we've seen about 2.5% gains. So on the whole, plenty of stocks to keep an eye on. And of course, the benchmark indices and what they do in today's job trade.
Stock of the day is Lumax Auto Technologies, the auto component maker. It's with a market capitalization of around 1,000 odd crore. The company has reported good set of numbers, 26% jump that we're looking at in the top line growth of the company at a number of 277 crore as compared to nearly 220 odd crore in the corresponding quarter. Net profit has shot up, has risen more than 3-folds for this company at a number of 13 odd crore as compared to 4 crore that we've seen in the December quarter of the previous year. Also, EBITDA, the operational efficiency has crept in for this company. We're looking at EBITDA number which is a 65% jump at a number of 28 crore as compared to nearly 17 crore in the December quarter of the previous year. Margins have shot up to 10.1% as compared to 7.7% for this company. Now, improved aftermarket sales along with the increased sales volume of your customers, the major customers like Bajaj Auto, Maruti Suzuki, has led to the high revenue for this auto component maker. Better operating efficiency and the improved performance of subsidiaries also also has aided the expansion of margins. Now, in terms of cost optimization measures, raw material expenses as a percent to your net sales has come down to 54% from 58% in the corresponding quarter. Also, other expenses as a percent to your net sales have fell to 12% as compared to 16% seen earlier. Finance costs for this company has also come down on year-on-year basis by as much as 35% to a number of less than 1 crore as compared to 0.92 crore that we've seen in the corresponding quarter of the previous year. With this, let's toss it over to Scott Darling of JP Morgan, who sees the Brent crude to average around $70 per barrel in this year. In a conversation with Bloomberg's Wyman and Ben Shops, Darling said that fundamentals for oil remain strong and that there is nothing in the data to suggest that oil demand is tailing off. Listen into the conversation.
We forecast $70 on average this year for Brent. We could see $75 in 2Q. We'd agree that demand has been particularly strong, not just seasonally, and there has been some tightness in some of the supply data as well. I'd cite Venezuela as a particular risk.
So what do you think OPEC should be more worried about? Is it not really the surge in shale? Is it going to be the market volatility, or is it kind of this, I guess, a concern that slowdown in demand too?
I think the demand risks are valid. I think, data we'd be watching is, say, this summer of the US driving season. They're quite a sensitive consumer, and depending on what oil prices are around that time, that is certainly something to watch. But you're right. I think, the fundamentals are particularly strong. I mean, JP Morgan economists put out a note recently on emerging market GDP growth, that we're in a sweet spot here. Global GDP growth we're forecasting at 3.5% and EM growth at 4.9%. So there isn't anything in the data which suggests at the moment demand tails off.
Now, Scott, I can't help but imagine in my head that U.S. shale producers are saying, oh, really? You think you can actually do that? I mean, by the end of this year, 11 million barrels is the estimate coming out of the United States. What is your thought? Is this a challenge? Is the gauntlet thrown down for U.S. shale?
Not necessarily. I mean, look, we're forecasting, I think it's also around consensus, about 1 million barrels per day shale growth. I think what you are seeing in sort of the US reporting season is much more focus on sort of free cash outlook. So if you think last year, US E&P names grew capex probably around 60% or so. This year, even though we've got higher oil prices, I doubt we're really going to see that. We might see half of that growth. So I think the focus is more balancing sort of output with free cash progression.
All right, now there is a lot of optimism, a lot of bullishness here with oil, but we have to be a little bit cautious, of course, of volatility here. In terms of risk, what is the biggest risk to the call that you guys are putting out?
I think, like I mentioned to Yvonne, I think the demand elasticity, and the IEA has made this point, is certainly a risk. I don't think necessarily you'll see that, but that's a negative risk to oil as we probably in the second half of this year. And I also think maybe we're wrong on shale. Maybe there is more upside risks. That would be more of a concern. I think on the positive side, I think some supply side risks. I mentioned Venezuela. I mean, bear in mind, Venezuelan output is the lowest for 30 odd years. And other countries, if you start to see declines from sort of natural declines in their output, that's also a risk.
Well, staying with the commodity space, the LME base metal index actually ended nearly 2% higher. As far as individual base metals are concerned, we had LME copper, zinc and nickel that ended more than 2% higher, while lead and tin gained nearly 2% each. Now, one of the reasons that we are picking up for the surge in zinc prices is that analysts are saying that the zinc market is likely to remain tight in 2018. Moving focus to the precious metal space, COMEX gold is trading higher for the third consecutive session on the back of the dollar index, which has now slipped below the 90 mark and is now trading negative for the third straight day. As far as oil prices are concerned, we saw some bit of dip come about for oil prices. Mind you that WTI has been trading below the 60 per barrel mark for the fourth consecutive session. Now, all of this is on the back of inventory data that is likely to build up in the US. So API is expected to report an inventory buildup of nearly 4 million barrels for last week, while gasoline inventory is likely to climb as much as 4.5 million barrels for last week. With that, let's shift focus to the currency space, and Saloni Dhanuka is here to give us all the updates there.
Thanks for that, Jay. So, talking about Indian rupee, it was tracking gains in the Asian currencies market on Monday, and it closed marginally higher against the US dollar. Now, the home currency moved in a narrow range of 10 paise throughout the day before settling 8 paise higher at 64.32 levels against the dollar. Elsewhere, India's factory output expanded at 7.1% in December, which is well above the expectations of 6.1% growth. Elsewhere, retail inflation came in line with expectations at 5.07%. Now, both this data may support Indian rupee in today's trade. Moving on to debt market, sovereign bonds declined as yield on the new benchmark security jumped 1 basis point to 7.50%. On the global front, the Japanese yen rose to a 5-month high against the dollar yesterday on speculation that Bank of Japan may cut down or reduce its monetary stimulus program, according to a Bloomberg report. On this news, yen jumped more than 1% against the dollar, and it trades well below the 108 mark. While speaking of the dollar index, it extended losses for the third straight session, and it ended 0.5% lower yesterday at 89.50 levels. And lastly, coming back home, dollar rupee is trading at 64.26 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade.
Well, the Reserve Bank of India late on Monday released a new framework for bad loan resolution. The headline there is that the new rules put an end to a series of stressed asset schemes which had been launched or introduced over the past few years. Those, of course, include the Strategic Debt Restructuring Scheme, the S4A, and the Corporate Debt Restructuring Scheme. Instead, a strict 180-day timeline has been prescribed, over which time banks must agree on a resolution plan for the stressed assets. If they fail to agree on one, large stressed accounts must immediately be referred for resolution under the Insolvency and the Bankruptcy Code. Now, the new framework asks banks to identify stressed accounts immediately on default, and lenders are then required to classify them as special mention accounts and begin resolution. So, the Joint Lenders Forum, additionally, that's a big headline, that has so far coordinated negotiations between the lenders and the borrowers, has been disbanded. According to the new guidelines, lenders will have to report defaults on a weekly basis in the case of borrowers with more than 5 crore in bank debt. The first of these reports will need to be submitted for the week ending February 23rd, that's next week. A resolution plan now will have to start immediately as soon as there is a default, and this could involve one of 4 things. First up, you have regularization of the account by payment of all overdues by the borrowing entity. That's essentially where the amount is repaid by the borrower. Sale of exposures to other entities or investors where the bank sells its loan, a change in ownership, or the restructuring of the loan. And that restructuring could involve modifications to the terms and conditions of advances, including an alteration of the repayment period, the rate of interest, and the installments that are payable. With regard to the referral to the IBC, or the Insolvency and Bankruptcy Code, for accounts with an exposure of over 2,000 crore rupees, banks will have to ensure that a resolution plan is in place within 180 days after the default. If the resolution plan is not implemented within 180 days, as we said earlier, it must be referred to the IBC within 15 days. These new timelines come into effect from the 1st of March. There's a lot more on that story, and you'll find all the details on the website bloombergquint.com.
Well, amongst the stocks that we're tracking today morning includes Indoco Remedies. Now, the company has received 8 observations from the US FDA for its Goa plant. Not any severe observations on the looks of it, but nevertheless, let's see how the stock reacts. We're also watching out for Piramal Enterprises. Now, the company will transfer assets to its wholly owned subsidiary Piramal Finance for 1,910 crores. That apart, we're also looking at Puravankara, where according to a PTI report, the company is planning to set up a 2,000 crore realty fund to develop affordable housing projects. So let's see how that name reacts. You're also looking at Precision Camshafts. Now, it's a smaller company, not much in terms of the volumes traded, but they've received multiple orders worth 275 crores. So you could see some positive reaction there. Rolta India is another one. They have signed a pact to restructure the dollar bonds which were due in 2018, 2019. So you could see some reaction coming in there. according to a Mint report, Max Life has emerged as the front runner to buy as much as 51% stake in IDBI Federal Life. So watch out for IDBI Bank, Federal Bank, and also Max Financial, which holds stake in Max India. Fortis Healthcare is another one that we are watching. Now, the company said that they will buy all the assets of RHT Health Trust. Now, this was something that they had proposed earlier, but they're going ahead with the agreement now. So, the enterprise value has been set at 4650 crores. In fact, what they have also said is that a substantial part of the net proceeds from this consideration that RHT receives will actually be distributed to some of the unit holders, of which Fortis Healthcare is also one of the unit holders. So that will actually reduce the net investments that Fortis actually makes in RHT. Additionally, they've also said that they will form a panel to oversee strategic operational functions of the company. Now, this is after the promoter directors resigned. So a couple of news flow as far as Fortis Health is concerned. The other part, we're also looking out for CG Power and Industrial. Now, they will sell the Hungary business, excluding switchgears, for 38 million euros. This is something, again, that they had announced earlier, but they're executing it now, so the money will come in now. The deal is expected to be completed by 31st March. And lastly, we're also watching out for KRBL. Now, renowned investor Monish Pabra Investment has bought 2.7% stake in the company in a bulk deal on Monday. On the other hand, two Saudi Arabian based entities have sold 1.4% stake each, whereas they held about 3.9% stake each as of 31st December. So let's see how that one reacts. So those are the stocks that you need to watch in trade today. But with that, let's go over to Vishwanath Nair, who joins us on the phone line with more details on the SR Steel case.
So, Shraddha, what has happened over the course of Tuesday is that the Delhi High Court has put a stay on the sale of the Odisha pipeline from Shrey Infrastructure to New Metal Mauritius. New Metal Mauritius, as you know, is one of the two bidders for SR Steel assets. Essentially, anybody who controls this pipeline in Odisha controls the flow of raw materials for SR Steel. And that's an important part of the whole infrastructure because it is responsible for about half of the raw materials that come into the steel plants. And without it, or if somebody who controls it will obviously have some sort of an advantage over other bidders in this case. So the other bidder in this case is ArcelorMittal, who had submitted a bid on Monday. The lenders had since then opposed this sale and said that, nobody can get this kind of advantage. They had approached the Delhi High Court, and we are seeing the result of this. The history of Odisha pipeline is also problematic because there is already an ownership dispute between Shrey and SR, which has been going on since 2016. There is an injunction in the Calcutta High Court for this matter, and it is maintained at status quo stage at this point in time. So we don't know what the Calcutta High Court will decide in the matter, but as of now, the deal is on hold till the 5th of April, which is when the next hearing in this matter would be.
Okay, the final Nifty number that will be out today will be Sun Pharma. What can we expect? As far as the top line is concerned, we are seeing a degrowth of almost 12%. On the bottom line, we are seeing a degrowth of 45%. And margin will be down by 38%, which will mean that the EBITDA margin will be 21.8% versus 31%. Now, the main reason for a weak number that can be expected is the fact that Taro came out with an extremely disappointing set of numbers, much lower than what the street was anticipating. So pretty much that will be factored into Sun Pharma's numbers. Now, there was a lot of booking on a quarter-on-quarter basis. It will be decent because, a lot of bookings that were done in the second quarter were deferred into the third quarter. So they will come in this time around. Seasonally, it's a strong quarter for the subsidiary DUSA as well as the Coreg launch that had done that will aid the revenues of the company. Glivec market share gains. They've reintroduced certain products from Halol. So that is something that will aid revenues. But nevertheless, pricing pressure and competition will be there in the US markets, and that is why we're seeing a 30 to 35% drop in the US business, while double-digit growth in the Indian business can be seen on the back of a low base this time around.
GAIL came out with a weak set of numbers in the third quarter of financial year 2018. Now, though revenue was up by around 16%, EBITDA came down by 5% while margins contracted to 13.7%. Also, the net profit fell down by around 4% in the third quarter of financial year 2018. However, on the operation side, gas transmission volumes were up by 3% while petchem volumes remained flat. Now, if you see operationally, the numbers were below estimates because of higher employee cost and higher other expenses. However, on the bottom line front, the numbers were largely in line because of a significantly lower interest cost and because of marginally higher other income. Now, if you see on the volume front, gas transmission volume surprised positively, led by increased offtake from power plants due to lack of coal supply, while the petchem volumes remain muted. Now, unless we're expecting the petchem volumes to come around 185,000 metric tons, but the company reported a number of 176,000 metric tons because of an interruption due to power supply disruption. Now, brokerages like Motilal Oswal, Antique and CT have maintained their stance on the company, while IDBI Capital has downgraded the stock to accumulate, citing limited potential upside. Also, the company has declared an interim dividend of 7.65 rupees per share and a bonus issue in the ratio of 1:3.
Fivefold increase, you're comparing it with the third quarter of last year, where we had some losses coming in. But this year, on the back of very good growth of the company for the 3 quarters, like you see, we are seeing the growth in the agriculture segment also. And also on the back of good underwriting that we have done, and a very conservative reserving, we have been able to show very good profit after tax this time.
Ma'am, there is a spike in the claims that have been paid as well. So which segments contributed to that?
Yeah. See, if you have been observing the trends in the international market and domestic markets for some time now, last 2 quarters we have seen claims for Harvey, Irma, Maria, Mexican earthquake, Californian fires and all that. So all big reinsurers of the world have taken a big hit from these. So we have also had to pay out claims for that. So around 1,900 crores claims we have paid out for all these catastrophe losses. Yeah. And agriculture claims have also come in because it's seasonal. So depending on the season is over, Kharif season is over, and the claims are slowly coming in. So for these 2 segments, we have paid out claims.
Talking about the agriculture insurance business, which has become a significant part of the portfolio, considering that you take on 50% of the crop insurance risk. So I would like to ask that the claims have increased to about 980 crore. In fact, the IBNR reserves have also spiked to some 353% to 12,000 crores. So how do you see that changing? Do you see the reversal coming in? And how do you think that would happen?
Yeah. See, the earlier quarters we didn't have claims. The claims have come in the third quarter. So 990 crores would only be the claims which have come in for the entire year so. But like you said, we are very conservative as regards reserving in the agriculture segment. And I'm sure that going forward in the next quarter, the reserving should take care of the claims which are coming in. But we don't anticipate any big claims. But I think the very purpose of reinsurance or insurance is to support the farmers and the public when there are claims. I think to that point, we are doing our justice to our job.
Ma'am, any update on the other 2 government schemes, Pradhan Mantri Jeevan Jyoti and Pradhan Mantri Suraksha Yojana? How has been the progress there? And all the 3 schemes combined, what is the kind of commentary you would have for the next year? How do you see it growing and everything?
I think on these government schemes, there have been requests from the companies, both from the life companies and the non-life companies, that they should be reviewed for rate corrections, given that these portfolios have not been too well. And I think it was time enough. It was the right time for a review. And I think the government will take that into consideration. But otherwise, on the health scheme, which is yet to be rolled out, we feel that actuarial price will play a big role. And the finance minister has just promised today that the funds are there with the government and they are looking to roll out the scheme to 50 million people in the country. And I think that also will be a huge success.
On the big brokerage calls for the day, first we have is UBS on Britannia. Now, they have maintained their buy rating on the stock with a target price of 5,550. In the third quarter of financial year 2018, according to the UBS estimates, Britannia has reported a double-digit volume growth in their domestic business for the first time in the last 5 quarters. And this double-digit volume growth is a positive surprise. Now, during the quarter, the raw material prices remained stable, which helped in profitability. However, the geopolitical uncertainties in the Middle East and the Africa contributed to a slower growth in the international market. Now, according to the brokerage, the current stock price of Britannia does not factor in the potential of new initiatives taken up by the company, and going forward, the brokerage is expecting the volume growth momentum to accelerate further in the second half of financial year 2019 as the benefits announced in the Union Budget 2018 start flowing into the rural consumers. Second, we have is Macquarie on Shobha. Now, they have maintained their outperform rating on the stock but have raised the target price to 646 from 603. Now, the third quarter results of Shobha were in line with the estimates according to the brokerage. The company has demonstrated strong operating performance. Shobha's quarterly pre-sales were at an all-time high, and going forward, new launches will aid this momentum. Now, operating cash flows remain positive and strong at close to around 140 crore rupees, while the company's net debt position was under control. Now, going forward, new launches planned in key markets like Bangalore, Chennai, Mysore and Cochin will aid company's pre-sales growth going forward.
Here are a couple of stories that you'll find if you log on to the website bloombergquint.com. First up, markets regulator SEBI has cracked down on alleged accounting fraud at imaging and printing equipment maker Ricoh India, as it called for a second audit of its account books and banned 7 persons, including former top executives, from accessing the securities market. Delhi-based Fortis Healthcare has sought a 15-day extension to declare earnings for the second and the third quarter of the current financial year, citing statutory auditors' inability to complete the audit before the stipulated board meeting. That's all we have for you on All You Need to Know, but up next is Indian Open, so do stay tuned. This is Bloomberg Quint.